Brian, thank you so much for joining us. Really appreciate it. Hopefully you're having some great weather in Miami right now.
No complaints. A little bit hot, but we'll get through it.
Great. Well, can you just tell us a little bit more about kind of your journey and how you got to where you are right now? And then after that, kind of what your company focuses on.
Sure. I grew up in Miami, Florida. I did my undergrad at Harvard, where I majored in economics. After Harvard, I spent 5 years in finance doing investment banking and private equity. And then I got my MBA from Wharton with a focus on real estate and entrepreneurship. Following my MBA, I joined my family business. We've got 2 businesses. One is an insurance agency called Riemer Insurance Group, where we focus on property and casualty, life, health, and benefits insurance. And then we also have a real estate business where we own and operate about 150 properties here in South Florida.
That's fantastic. That is that very diverse and pretty high scale, it sounds like, as well.
Absolutely.
And obviously the 2 businesses are a little different, but would you say overall, are you positive or apprehensive about the kind of the state of the market coming over the next year?
Overall, our business is very strong in terms of the way that we're set up. We call it, we don't have different businesses. We're in the recurring income business. And so insurance agency and real estate rentals are very much recurring revenue streams for us. Insurance businesses tend to be pretty countercyclical because everyone at the end of the day needs insurance, whether it's for a building or their cars or their business. There's lots of opportunities for us to protect our clients. And then in the real estate market, we've really experienced tremendous tailwinds from the South Florida marketplace, just an influx of people moving down here.
Most of New York is there, right?
Which has been great, extreme amount of development, and we've seen a lot of benefits in the rental market as a result of that. I think that the marketplace will make it a little bit harder for us to continue to buy at the same levels that we've been purchasing at, just given where interest rates are going. So that'll affect overall values over the next year or so. But I think that as rental incomes stabilize to be in line with those new interest rates for investors to get a return, the proper return on their investment, I think that we'll be able to continue to be successful in our strategy.
That's great. It seems like you're a little bit more in the recession-proof industries. So insurance tends to be, I think, a little bit more on the, not as the big ups and downs. So that's fantastic.
Thank you.
And then internal to your business, what is the biggest change you've seen since the pandemic?
The biggest change we have seen since the pandemic is the change in the labor markets. I think that the talent pool has been harder and harder in the insurance industry to recruit because you have a lot of talent that has been retiring over the last 5 years, just aging out of the workforce, and recruiting young people into the insurance industry is challenging. It's not the most sexy on the face of it. And so trying to explain why insurance is an incredible business and career for long term has been a major challenge for us with new young recruits who want to grow in this business. On the real estate side, the biggest change during the pandemic has been kind of our portfolio base, which is a mixed portfolio between office, retail, single-family homes, and residential multifamily. We've seen that growth has really taken off in both our residential and industrial properties, and we've seen our office and retail be more stable.
It's funny, you actually, you don't know these questions, but you literally forecasted what I was going to ask you on the next one. It says, has hiring and retaining good staff become more or less difficult since the pandemic?
Definitely more difficult, and definitely it's a new world. I mean, we've had to shift to more flexibility when it comes to working from home, which is not ideal in our environment from a training perspective, from a collaboration perspective, and also just our culture. We're a family-owned business 100%, and part of what makes us special is just not having everyone be a number, right? Like if you just have a shell culture and everything's only transactional, it's not really a warm place for you to be working. And we want to have long-term relationships with our employees who, for the most part, have been with us for over 10 years. And we really pride ourselves on that. But just to hire someone remotely, it's much easier to outsource work abroad for a lot less money if that's the transactional nature of your business. But ultimately, that's not the best solution for us. And so we're continuing to try and find the right fits for our environment going forward.
And we actually struggle. We do the outsourcing. Like we have a lot of people that were in the office, and now it's kind of that hybrid model. So we really try to focus on maintaining that connectivity. That culture is key, because a lot of people can go to different companies and make more money, but are they going to be treated right? Are they going to be not a number? Are they going to be a force of betterment to make sure that the people are our business, right? Without people, we don't have a business.
That's right.
So I couldn't agree with you more on that as well. Is there any departments that you find more kind of more challenging for retention than others?
I would say that over the last 2 years, the department where we've had the most difficult time recruiting for is our personal lines department. And part of that has been, it's been quite chaotic in South Florida. So personal lines means home, auto, umbrella, flood, boats, airplanes, domestic employees, that sort of thing. And jewelry, fine art, all would fall under that umbrella. The market in South Florida has become pretty hectic in that many of the carriers have either pulled out of the marketplace or been forced out of the marketplace by the Office of Insurance Regulation. And because of that turmoil, it's put a lot of stress on that department. And I think that it's been a less desirable role for many people. Whereas I see that turmoil and I see lots of opportunity.
Yeah.
And so trying to spin that and have people see my vision for that department is an exciting challenge for us.
So is it because there's not enough people to be able to do the work and there's too much coming in and they're drinking out of a fire hose? Or is that the challenge?
It's definitely part of the challenge. We've year to date, we've grown about 24% top line. So every person on our team is certainly inundated. We're interviewing all the time, trying to grow the team. A lot of one-on-ones, making sure that we find the right fit. Again, because we're a team of a little bit over 50 people, so we want to make sure when we do bring someone on the team, they're really the right fit for us long term. And we stress 3 main things for all new people on our team. Just it's important for them to understand our culture. The first is family always comes first for us. So if you have something that comes up with your family, whether it's a little league game or just any sort of family emergency, that's got to be a priority for you. And we would be upset at our employees if they didn't make that a priority, because that's ultimately awesome. It's a long-term vision for us to have people who want to be part of our family long-term. So family values are really important. The second thing for us is continuous improvement. Everyone on our team gets individualized education goals for them to accomplish. We have the philosophy that a rising tide lifts all boats. So as each person on our team gets a little bit better, our team as a whole gets better. And then last but not least, it's just loyalty. We want people who want to be part of our organization long term, and loyalty is earned, not given. But we believe if you treat people the right way, they'll want to stay around. And for us, I think that's evidenced by the fact that we've had people as part of our team on average for over 10 years. So we want to make sure that we find that right person who's demonstrated that loyalty over the course of their career.
That's fantastic. I could not agree with you more on those are some key drivers to keep people long term. And kind of looking toward your sales and marketing, do you feel that there's kind of more impressions needed to convert business, or less, since kind of your experiencing recently?
On our sales and marketing, I would say that 90% of what we do is referral based. So we don't really have a quote unquote measurable customer acquisition cost that we focus on in terms of our metrics. But with that being said, because there are more people shopping rates and insurance, with insurance prices spiking, and fewer options available to candidates who are looking for insurance, I'd say our hit ratio is slightly lower than normal, but our overall volume is much higher.
Much higher. Okay. And would you say your sales cycles has changed at all?
No, it's an annual sales cycle.
Gotcha. And then what about cost creep? Have your wages been pressurized as of late?
Significantly. I would say that for the same position 2 years ago, we're probably paying 20 to 30% more for that same position.
So even just trying to keep your current people up to market rate, and then on top of that, any of the new people that you're bringing in with much less experience, I assume.
Yes. So a lot of emphasis has been invested in training, and that's an expensive process, but just overall G&A costs for each employee. And it's not just their salaries, right? It's all the benefits that go alongside it. The healthcare, 401k administration, disability, everything that goes along with our employment packages have also increased. So we've just focused on our organic growth strategy, which fortunately has helped us stay in front of those costs, but would love to have some stabilization there so that we can continue on our growth trajectory.
Yeah, I hear you. Would you say kind of operational? I assume you have your processes pretty clearly defined, documented, and kind of throughout the organization?
We do.
And I assume that helps a lot with training.
It wouldn't work without it.
Exactly. And then how do you decide upon kind of and your KPIs? Like how do you structure or kind of evaluate?
So our KPIs are department specific. So we have different KPIs that we look at for personal lines versus commercial lines. And we have different KPIs for the different roles, from account managers, customer service, to also sales teams. And we've kind of developed it through our department managers and making sure that we're measuring, at least on a bi-weekly basis, the right activities that our systems allow us to track. But essentially, they're geared towards efficiency and client satisfaction. Okay,
great. And we find that the more KPIs you have, the more the employees understand what they're focused on, and are they successful in what they're doing. So a lot of times when people just get work to do and they don't have goals.
Yeah, I would say it's been a mix. On the one hand, for us, it's given much better visibility to troubleshoot where there are issues. On the other hand, some of our employees have felt that it's micromanaging and it's stressful for them to try and be perfect on everything, and they're just so focused on a number that sometimes it's like a big hit to morale if they don't get to where they want to be. And I think that stress isn't for everyone. So just a lot of conversations with employees, letting them know what's important as part of those tracking for us is when we see an issue, it's all about the communication and the transparency and the conversations we have versus we're not attributing just these numbers to you. You're more than that. And we understand that there's a story behind each set of numbers.
And to add to that, it's how can we support you? This isn't to get you in trouble. This is, hey, like there's too much work. How do we alleviate that? And how do we kind of support versus scold, if you will?
Right. Because you don't want your employees to just feel like, okay, they're churning out numbers, they're pushing paper, and that's all they are, right? We're here to help foster their development and make sure that they're achieving their goals. But the data is the best way for us to get many of those insights.
Yeah, it's interesting. We're in kind of very different industries, but a lot of the same principles that we have within our company as well. And then, kind of finally, do you have any big market predictions for this upcoming year?
I don't know if it's a big market prediction, but unfortunately, it looks like we are headed towards a recession, from what I can tell. But I do think that is location specific. I do think that South Florida is quite an insulated marketplace. And now we operate across all 50 states. So we're not just insulated to South Florida, but South Florida happens to be where the bulk of our business is because that's where we're based. And I do think that while you may have an overall recession, I don't see South Florida slowing down for the rest of this year. So I guess that's a little bit contrarian.
Listen, I honestly agree. Like there's going to be some major slowdowns in some areas, but we're seeing like recruiting is one of our bigger areas, and we've seen that kind of drop off significantly. But then some areas in the tech recruiting is still like you can't find people. So it's kind of those like some good news and some bad news. And then if it does hit, I can't imagine it being a long-term hit. It's probably honestly a little bit good for the markets to kind of adjust a little bit, so there's more opportunity because it can't go on that pace so long, or everybody's gonna be priced out of everything.
Exactly.
Well, Brian, thank you so much. This was super helpful, and wish you all the best.
All right. Thanks for the opportunity.